Welcome to El Oraculo Cifrado, the channel where we decode the secrets of money and cryptocurrency that the financial system would rather keep hidden from you. Today we're breaking down. Wait. Before you close this video thinking it's just another scam, give me 30 seconds. What if I told you there are completely ordinary people, with ordinary salaries, building real wealth with just $100 a month? It's not magic, it's not luck, it's not some shady scheme. It's pure math, proven strategy, and time. Today I'm going to show you exactly how it works, with real numbers that will make you rethink everything. You spent years in school learning history, trigonometry, and literature. But nobody, absolutely nobody, ever taught you how money actually works. Nobody explained compound interest. Nobody mentioned financial markets. Nobody told you that time is the single most powerful asset you'll ever have. And that wasn't an accident. The system prefers workers, not investors. Today we break that chain, because what you're about to learn in the next few minutes is worth more than 12 years of school combined. Albert Einstein, one of the most brilliant minds in human history, called compound interest the eighth wonder of the world. And he said something even more powerful: he who understands it, earns it, he who doesn't, pays it. Think of it this way. Your money generates returns. Those returns generate more returns. And those returns generate even more returns. It's a snowball rolling downhill, growing bigger and bigger with every turn. In 10 years, that snowball can become an avalanche. Hold on, because here comes the number that changes everything. If you invest $100 a month for 10 years, you'll have put in exactly $12,000 of your own money. $12,000. That's all you contribute. But if that investment grows at an average of 15% per year, which is conservative when you properly combine Bitcoin and ETFs, after 10 years you'll have approximately $26,000. If the return climbs to 20%, we're talking over $38,000. And if Bitcoin does what it has historically done, the numbers become completely irrational. Do you see now why starting today actually matters? Alright, here's the real strategy. Don't put all your eggs in one basket, you already know that. But what you don't know is exactly how to split those $100 to maximize gains and minimize the risk of one bad month destroying you psychologically. The three pillars are simple. First, $50 into an S&P 500 ETF, the index tracking the 500 largest companies in the United States. Second, $30 directly into Bitcoin. Third, $20 into a high-yield savings account as a liquidity cushion. Simple, elegant, and powerful. Stop. Breathe. I want you to think about something for a moment. Right now, while you're watching this video, there are people across Latin America spending those same $100 on clothes they don't need, on nights out they won't remember, on subscriptions they forgot they even had. I'm not judging, I did it too. But there is a very thin line between the you of today and the wealthy you of 10 years from now. That line is called a decision. And you can cross it right now. Keep watching. Let's talk about the elephant in the room, Bitcoin. I know some of you are already believers, and I know others still think it's a scam or a bubble. But here are the cold, hard facts. Bitcoin is the best performing asset of the last decade. In 2013 it was worth less than $200. It touched $69,000 in 2021. Even after brutal crashes, anyone who bought and held came out ahead. Michael Saylor, founder of MicroStrategy, turned his entire company into a Bitcoin accumulating machine and multiplied his stock value more than 10 times. I'm not saying put everything there. Dollar cost averaging. 3 words that can save you from your worst enemy in investing: yourself. Here's the problem with most beginner investors. They buy when the market is up, euphoric, convinced everything will rise forever. Then they sell when the market drops, terrified, convinced everything is going to collapse. Result, they buy high, sell low, and lose money. DCA eliminates that problem entirely. You simply invest the same amount every month, regardless of whether the price goes up or down. When it drops, you buy more units. When it rises, your portfolio grows. No emotions. No panic. Just discipline. Let me show you something that's going to hit you hard visually. In year 1, your $100 monthly contributions generate maybe $180 total with returns. Modest, almost disappointing. By year 3, you have around $4,500. You start to feel something. By year 5, you cross $8,000. By year 7, you surpass $15,000. And here is where the magic truly explodes. In years 8, 9, and 10, the growth accelerates so aggressively it feels like someone switched on a turbo engine. Compound interest doesn't grow in a straight line, it grows on an exponential curve. And that curve launches at the end. Pattern interrupt. I need you to hear this with your full attention because this is where 90% of people destroy their portfolio. The mistake is called market timing, trying to guess the perfect moment to buy or sell. I've seen smart people who study markets obsessively, sit and wait for the perfect price. Waiting. Waiting. And waiting. While they were waiting, Bitcoin went up 400%. Time in the market always beats trying to time the market. Every single day you wait for the perfect moment is a day of compound interest you lose forever and can never get back. This video is possible thanks to Binance. Compare Bitcoin sin commissions. Link in description. Let's talk about the silent hero of your portfolio, S&P 500 ETFs. Warren Buffett, the man who has spent 60 years picking individual stocks better than almost anyone in history, publicly stated that most investors would be better off simply buying an S&P 500 ETF and forgetting about it. When you buy an S&P 500 ETF, you're buying a small piece of Apple, Microsoft, Amazon, Google, Tesla, and 495 more companies, all in a single purchase. The historical average return of the S&P 500 over the last 50 years is 10% to 11% per year. No effort. Here's the uncomfortable truth that nobody in the personal finance world wants to admit. The investment strategy is not the most important factor. Mindset is. You can know exactly what to buy, when, and how much. But if you panic and sell everything at the first market downturn, if you skip your investment the first month things get tight, if you convince yourself this is only for people with more money than you, you'll have failed before you even started. Millionaires aren't smarter than you. Close your eyes for a second. Imagine it's 7 in the morning, 10 years from now. You open your investment app. You see a number that would have seemed impossible to you a decade ago. You're not a millionaire yet, but you have a solid foundation, you have options, you have freedom of choice. You can change jobs without fear. You can take that trip. You can say no to things you don't want. All of that, with $100 a month, discipline, and time. The only requirement is starting today. Alright, here is the concrete plan, no fluff. Week 1 of the month, open an account with a regulated broker like Interactive Brokers, eToro, or Bitso depending on your country. Week 2, set up an automatic purchase of $50 into the VOO or SPY S&P 500 ETF. Week 3, buy $30 in Bitcoin through whichever platform you chose. Don't move that Bitcoin. Don't touch it. Week 4, transfer $20 to your emergency fund in a high-yield savings account. Set everything on autopilot so you don't rely on willpower. Then repeat. Month after month. Year after year. No excuses. Now, before you think $100 is the ceiling, let me give you the scenario that will motivate you to find more money. If by year 3 you manage to increase your monthly investment to $200, and by year 6 you reach $300, the effect on your final portfolio is absolutely devastating in the best possible way. We're talking figures that could exceed $80,000 or even $100,000 depending on Bitcoin's performance. Every extra dollar you find, whether by cutting expenses, generating side income, or selling things you don't use, becomes a soldier working for you 24 hours a day, 7 days a week, without rest, without complaints, and without asking for vacation. Mistake number 1, investing without an emergency fund. If you don't have at least 3 months of expenses saved in cash, the first unexpected event will force you to sell your investments at the worst possible moment. Mistake number 2, checking your portfolio every single day. This is psychologically devastating. Watching daily ups and downs will push you into emotional decisions that will destroy your returns. Check it once a month at most. Mistake number 3, the worst of all, not starting because you don't have the perfect plan. The perfect plan doesn't exist. The best plan is the million-dollar question, where will Bitcoin be in 10 years? Nobody knows for certain, and that's the honest answer. But the historical data tells a very clear story. In every 4-year cycle, Bitcoin has reached a new all-time high well above the previous one. BlackRock's Bitcoin ETFs, with Larry Fink at the helm, are pulling in billions of dollars in institutional money. Global adoption keeps accelerating. If Bitcoin repeats even half the performance it delivered in the last decade, those $30 a month you dedicate to it could become the most explosive part of your entire portfolio. The risk? Real. I'm going to be completely honest with you on this slide because you deserve it. Getting rich with $100 a month doesn't mean you'll be a multimillionaire in 10 years. It means you'll build a real, solid financial foundation that the vast majority of people in the world will never have. It means you'll have developed the most valuable habit and discipline of your entire life. It means that over those 10 years you'll learn, grow, and likely increase your income, and every extra dollar you earn, you'll know how to multiply. Wealth isn't just a number on a screen. It's freedom, options, time, and peace of mind. And it all starts with $100 today. We've reached the end, and I want to leave you with just one question. How much is waiting one more year going to cost you? I'll answer that. If you wait 12 months, you lose approximately $1,200 of your own capital, but you lose something far more valuable, 12 months of compound interest you can never recover. The best time to start was 10 years ago. The second best time is right now. If this video gave you value, hit like, subscribe to the channel, turn on the notification bell, and share this with someone whose life it could change. I'm the Encrypted Oracle, and this is just the beginning of what we're going to build together. Subscribe to the channel and ring the bell to never miss a video. Every week we publish information that can change your financial future.